Hi everyone, Donna here with Bookkeeping Made Simple. I am going to talk a little bit about how to pay yourself as a business owner. This seems to be kind of a challenge for a lot of people because it's a mindset issue more than anything. They actually don't know how to pay themselves, and they don't think about it. It's really what it kind of comes down to, until about tax time, and their CPA looks at their books and says, oh, you really need to be paying yourself, and they go, I don't know how to do that. So one of the reasons this has kind of come up for me is that I've been doing my own personal budget, and so I have been trying to make sure that my personal income is separate from my business income, so that I can properly budget for my personal expenses and then properly budget for my business expenses. So we want to make sure that, well, let's kind of start at the beginning. Most people start their businesses as a sole proprietor. That means they're either set up as a single owner LLC, or they are simply filed as a DBA, got their business license, and they're doing business under their own name. Now, most of this is going to be geared towards the people who have filed an LLC, a single member LLC. If you have not, I suggest that you do that because they're treated the same way for tax purposes. So we want to kind of discuss the best ways of taking care of things. So this means that this is a flow-through entity type that reports their taxes on a on a Schedule C. That means it's just one of the schedules in your income tax return, and you just treat it as self-employment income. Okay. This is fantastic in certain circumstances. Now, if you're not sure if this is the best way for you to report your taxes, give us a call at 801-692-0032. Most of the time I answer the phone myself, and I'll talk to you about whether or not this is the best way for your business, because every business is different, and we want to make sure that everybody receives the best information about their business. In the end, my job is to provide information, and the business owner's job is to act on it. Choose what they want to act on and use it. The problem comes when it's time for a business owner to pay themselves. Now, most business owners do what is called commingling. And if you have followed me for very long, you know I don't like that. I do not like it when my clients commingle funds. And there's a number of reasons for that. The number one reason, and commingling is quite simply using business funds for personal use, or using personal funds for business use. You want to make sure that you have two separate buckets of money, and while you can move money from one bucket to another, the business bucket is for business and the personal bucket is for personal. So we're going to talk about how to get money moved back and forth appropriately. So a lot of business owners will simply use their business bank account as their personal bank account, and that creates a lot of trouble, particularly if they've gone to the trouble of setting up an LLC. The trouble starts if anybody sues you, okay? Because then the judge can, well, then the opposing counsel can request, and they can receive all of your bank accounts, all of your books, all of your financial records. They will do that as part of discovery. And one of the things they're going to look for is, are you basically treating the business's money as your own? If you are, you have pierced the corporate veil. And that means that when you filed that LLC, you created a veil between your money and the business's money. And you said, these are separate. This is an entirely separate entity from me. Never the twain shall meet except when I'm paying myself, which is what this video is about. So if the judge looks at it and goes, you're not treating this as a separate entity, all of a sudden, the purpose of having a corporate veil is to protect your personal assets and your business assets. So if you're sued personally, your business doesn't lose assets. And if your business is sued, you don't lose your house. Okay? You don't want that to happen. So you do not want your personal assets to be exposed if your business is sued. And honestly, most businesses are sued at some point or another. So yes, it's your money, but you can't treat it like your money. There are legal requirements. We call it compliance. You have to be in compliance with your business. That's part of what we do. We do much more than simple compliance, but that's usually a good way to get people in the door. You have certain things that have to be reported to the state at specific times, and we help take care of all of that. Also, your books have to be kept a certain way to make sure that your business remains in compliance with the state if they ever request to see your records, and they do have a right to see them. So it's an ongoing process. We want to make sure your business is in compliance. And if you are treating the business bank account as your own personal bank account, it becomes very difficult to do that. Also, if that's what you're doing, it becomes impossible. It becomes difficult at best to get funding for your business. And right now, I think we all need funding for our business, because any lender or any investor is going to look at your books, and they want to know that everything that's being accounted for in your books belongs to the business. So if you're spending $200 a week at Walmart and you're not listing what you bought there, oh yeah, that was for, a copier and a bunch of paper and office supplies for my business, they may say, well, as far as we know, it's groceries. Walmart sells everything. So it then becomes difficult to get funding, because that's what lenders look for. They want to know how your business is doing. It becomes difficult for you to do your own personal budgets, and it becomes difficult to have the information you need to make informed business decisions. So there's a lot of reasons besides taxes, because taxes are the tip of the iceberg for accounting. That's just what we have to do for the government once a year. What we really want is for you to have the information you need to make solid, informed decisions for your business and for yourself, for your personal life. So you don't want to expose your personal assets to your business being sued, really. Also, you want to make sure that everything you do in your business books is documented. So my suggestion, and I strongly recommend this, is you treat yourself like any other employee of the business. And that means that you sit down and you say, I'm going to pay myself every other Wednesday this amount of money, or the first of the month, this amount of money. You can do this by just going through your bills and seeing, how much money you're going to need for the month, and saying, that's my paycheck. Okay. The problem will arise if you are not bringing in enough to cover your paycheck. Okay. But you can say, that's my paycheck. That's what I need to get paid on. And then you can transfer the money. If you're at the same, I bank personal and business at the same bank. And so I will just transfer the funds from my business account to my personal account with a note. This is my weekly paycheck. I may then have to transfer some of it back, and I do that as a loan to the business, and then I have the business pay me back. But I do want to make sure that this is documented, that this is a regularly scheduled payment. Okay. I have employees that work for me. They get paid on a certain day of the week. I pay myself the same day. So it's every bit as sacred. Also, and the reason for that is it's just easier for investors to see how much you're getting paid. It's also easier for you to create a budget for your personal expenses. It's easier to see what's going on in the business, because then you can count that quite simply as a payroll expense. Okay. We probably would count it as an owner draw, but it's a regular thing. Okay, that makes it so much easier for you. It makes it easier for us. And it will satisfy your legal requirements. So if you ever, if you're ready to buy a house and they are starting to loosen up the lending on homes a little bit, I know of one lender that's taking 1099s. You can show them, I take a check of this amount every week or every other week or once a month, whatever you decide, and I will be getting a 1099 on it. But this is my, you can show them on your personal bank account. Now you don't have to expose that to the business account. Say, this is my regular paycheck as a business owner. So there's a lot of ways that you can pay yourself. I really, really strongly recommend having a set amount and paying yourself that amount every week or every other week, just like you would any other employee. Like I said, you can always transfer the money back. You can always borrow more. And I do recommend that you borrow it if you can always adjust it. There's a lot of things we can do, but you need to make those paychecks to yourself every bit as sacred. You would never skip paying an employee. You should never skip paying yourself. So that's it for today. If you have any questions, or if you are interested in having Bookkeeping Made Simple take care of your books, please give us a call at 801-692-0032, or you can contact us through our website. It's mysimplebookkeeping.com. We look forward to hearing from you, and have a great day.